Joining me now, Bridgewater's Chief Investment Strategist, Patterson, here at the Milken Investor Conference. Don't want to own stocks or bonds. That's been true. Is that still the case for you?
Yeah, it is. I mean, roughly we're neutral equities right now. We have been looking for higher yields, so we're bearish bonds for some time. We continue to hold that view. With the Fed pulling back as a big buyer of bonds, the question is who are the other players in the market who are going to come in? And right now we simply don't see enough of those folks incentivized yet to buy bonds, even with slightly higher yields. So we still think yields have room to rise.
What about recession odds rising? I mean, even Howard Marks was just here, Mark Carney. It's going to be tough to avoid if you look at history and you look at what the Fed has to do. So if we are slowing into a recession, aren't bonds a buy?
I mean, eventually they could be. I think that the question is, does the pattern that we're used to over the last 30 years still hold, right? So we're used to seeing you have rising growth, you have falling growth, inflation is low and stable. It's secondary, focus on growth.
Right.
Today we're in a different regime. Inflation is the bigger deal. And so we're at a place right now where the market's pricing in that inflation is going to be back near pre-pandemic levels within 2 years with only modest Fed tightening. So if you think, okay, does that math work? We don't. We think that either the Fed is going to have to tighten more than expected to get to inflation to their target, or inflation is going to be higher than expected. So when you're thinking about balance in your portfolio, Sarah, you mentioned bonds. We think the place you get balance today isn't bonds, it's commodities, it's inflation-sensitive assets. So you have to think differently about your portfolio construction. The paradigm of the last 30 years is not working now.
So commodities, What else do you like in this environment?
Well, again, you're trying to think what's going to protect me against inflation so I can have a balanced portfolio. If bonds aren't doing it, if inflation's the key driver. So it could be within the equity universe, companies that are going to be able to maintain pricing power. And we're seeing more of that coming through this latest earnings season. Who's able to maintain their margins versus who can't? So that's one. Commodities, diversified commodities, we still see a lot of upside there. Inflation-linked bonds are another opportunity that we see. And then even in the currency market, Sarah, you and I have always been in love with currencies. Yes. But the currencies representing commodity producers, so things like the Canadian dollar, just had Mark Carney on, we think that is a currency you want to be actually long that against the dollar.
Even though the U.S. dollar has been so strong, really, relative to most everybody.
Most everybody, but not everybody, right? So the commodity-producing currencies, not all of them, but many of them have actually been outperforming the dollar this year. Where the dollar's been strong is against countries where inflation isn't as big a driver and or where the central banks just have a different reaction function. Japan has seen a little bit of inflation, but they're being very, very determined to hold on to their yield control policy, and that's what's resulted in dollar yen taking off.